Guys, I've been looking forward to having this specific episode for a while now. This is one of my top 3 mentors, Leon Johnson, outside of Hattiesburg, Mississippi. And so it feels good to come to his house and spend some more time talking shop. So I'm looking forward to getting into some stuff. So Leon, I want to talk a little bit. First of all, thank you for sitting down with me. Because I know every time I've tried, you have your arm in a cast trying to fish or to hunt or something like that. But I've been wanting to share some of our conversations, which I greatly enjoy having with you, kind of share it a little bit more with the public. When did you do your first deal?
Oh my gosh, my first real estate deal? Probably 1975, Warrensburg, Missouri. I bought a little house for $10,000, and I got a commission when I sold it.
Because you were an agent.
I had a broker's license, but I was working as a salesperson for another broker. And that particular guy wanted to buy another house that we had listed, that I had listed, and that guy wanted to buy the first house in a brand new subdivision that we had sold the land to the guy. So I sold the very first house in that subdivision I was still in the military, and I sold that house to a lieutenant I was in the military with, he and his wife. And anyway, it was a 3-way deal, and I got commissions all the way around and gave me enough money to help me buy that first deal.
So you had sold the land to the developer.
Yeah.
And then this guy, you bought the house from him that he had.
Yeah.
And then you helped him buy the house from the developer that was now a new construction.
It ended up being a 3-way kind of deal. So that was my very first deal.
And then did you go to the bank to buy that?
I actually did. I went and got a bank loan for the balance on that. That's one of about 3 I've done in my whole lifetime. And
I want to talk about this. You were a broker in the 70s and the 80s. What types of transactions were you doing during that very interesting, the Volcker administration, inflation's soaring?
In 1974 and 75 was a real rough time in real estate. And a guy who eventually became one of my good lifelong friends owned, and I didn't even know him at this time, and during 74 and 75, he owned 4 huge like Lowe's stores. They were called North's Building and Supply in Kansas City. He had 4 of them. He lost them all because the market was so bad. I mean, he went bankrupt. Anyway.
What were you seeing in your brokerage at that time? Because I know you eventually had how many agents underneath you?
Like 50-something at one time. That's after I moved to Lee Summit, Missouri. But in Warrensburg, things were starting to get better. This guy from Kansas City came down, bought 40 acres, and started building houses. And that was one of the first, I sold the first one that was ever sold out of there. And helped name it and the whole bit. But anyway, things were starting to really move at that point in time. There were a lot of FHA and VA loans on the market back in those days.
Right.
And we did, a lot of bank type situations with people buying houses and getting new FHA and VA. But there was a ton of subject twos. That's where I started doing subject twos. It was actually when I moved to the Kansas City area, Lee Summit, Missouri, and took over managing that brokerage there. I had 2 secretaries. We were doing like 200 sales a month. I did all the deeds.
So that's crazy because people depend on the title or the title company or the attorney to do the closing statements and the deeds. Why were you all doing them?
Well, that's just the way it was back in those days. We did all the seller's side, and then the
buyer's broker,
the title company or the banks would do the buyer's side.
And so you have two secretaries who all day long they're on typewriters.
Typing.
They're doing the settlement statement and then the deed.
I was penciling in deeds and penciling in closing statements, and they're typing.
Okay. And
of course, I put the wording in the deeds. If it was a subject to, I did all the wording for that subject to, and there was not a problem with it back in those days.
And then, now one time you've told me this, at a certain point in your career, how often were you guys doing subject to deals?
About every day. I mean, just bunches of them, And
you were doing, and you're not talking as if you're serving only investor clients.
That's right.
You're dealing with civilians. And explain what that looked like back in the 70s.
As far as an investor?
So you were an agent and you were helping sellers and probably buyers.
Yeah.
On selling or buying subject to.
What was interesting back then too is there were tons and tons of little second mortgages on all these properties. People would sell them and maybe have $8,000 or $10,000 in equity, and somebody would put $2,000 down. The seller would carry $4,000 or $5,000.
Okay, so little small seller carry seconds.
There was just tons and tons of those out there, and we had these MLS books that we got every week in Kansas City, and they were about that thick, and they would deliver like 50 of those things every week, for all the agents in the office, and you'd have to figure out how to get rid of those things as often as you could.
Yeah, because you'd have all those books.
Oh gosh, yeah. And of course, you could just sit and go through that page by page for a certain area, and you could see who had those little seconds and whatnot.
So let's just say
you could go buy those. You could go buy those little seconds. You could call some of those people. They'd have a $4,500 second and say, "Look, can I buy that for $2,000?" And they'd sell that little second to you for $2,000. And you might sell that property a month later and collect the whole $4,500 or whatever. There was just a lot.
Which is a big deal, especially back in the 70s, to double your money like that.
Back then, a big house deal was $75,000 or $80,000.
Right. And so that's powerful because you started noticing. Did someone ever teach you to go buy those seconds, or did you just notice the trend?
Yeah, you just saw the trend, and of course Jack and John, I learned a lot from them, and later on in '78 about that sort of thing.
So Jack Miller, John Schaub, those guys.
Yeah.
Which you guys have heard those names from me before. Those are some of my other main influences, all because Leon introduced those guys to me. And so you were buying those notes, getting them at a discount because those people want their money. They want their money now.
Mm-hmm.
J.G. Wentworth or whatever the story you call it.
And then the house sells, and then you collect it.
And people are often impatient, and so they want their money today. And if you can get that at a discount,
right?
Then if you're willing to be patient when it closes.
And I was getting burned out being a broker. You go so long, you're working 7 days a week, and you got all these things going on, and I was just getting burned out. And I think you've heard the story about the guy that was changed my oil. He worked at a service station across the street, and ran over to the bar on the other corner one day to get a hamburger for lunch or a hot dog for lunch. And he said, "Hey, I want to talk to you about selling my house." So I set up a time Saturday, went to see him, and I went through and did my little analysis of the house and what it would sell for and that sort of thing. And today that same house, it was 4-bedroom, 2-bath, full basement, 2-car garage house. And today it sells for like over $300,000. And I told him, at that time probably $55,000 is what you can sell the house for. Well, I want to sell it quick. And he kept on and kept on. And finally he goes back to his bedroom. He brings out a letter, and he's being foreclosed on. He's 3 months behind. And he says, "Well, why don't you buy the house to me?" And I said, "Well, how much you want for it?" He said, "I'll take what I paid for it 3 years ago." And that's how much inflation was hitting at that point in time too. And properties were going up. And he said 21.9. And I ended up buying that house and moving in it. And my first child came home to that house, you know,
So you were able to buy it subject to?
I bought it subject to. And it had title problems, had an ex-wife. We had to give her like $1,100 or something. He owed the IRS $5,000 and something back taxes. Back then you could call the IRS and get them on the phone. I called them, got them on the phone. And they took $500 to release that house.
To go after him personally versus keeping it with the house.
Yeah, and it seemed like there was something else that we had to cure, and we cured the title, and the poor guy only got like $400 or $500, and I caught the back payments up. It cost me like $3,000 or something to get into the house. The payments were like $200 and something a month.
Yeah.
And
but it was worth $55.
And so I got to thinking, you know, there's got to be more of these deals out there. And here I am, a real estate broker, operating in the brokerage mindset, list and sell, list and sell. And I got to thinking, dadgum, you know, I just essentially picked up $25,000, which that was a lot of money back then.
That's a year's salary back then.
Yeah, $25,000 in equity. And I thought, I got to figure out a way to find more of these things, you know. And so after doing a little research, even having a broker's license, it didn't occur to me about trustee sales and that sort of thing. So I figured out about that, and I started going knocking on doors. I'd looked at anything that had a lot of equity. Independence Examiner was the newspaper back then that advertised trustee sales, and so I would get that, and I knew all the subdivisions in that greater area, and Lee Summit, Raytown, Independence, Blue Springs, those areas. And heck, I'd just go knocking on doors and started buying tons of properties, you know, and helping other people buy properties. And
there's just
subject to.
And there's some of the things you talked about here. So first of all, you talked about how so for example, with that subject to deal, you had to cure some other title issues, which helped your equity position.
Oh, yeah.
Right? And so, you know, this curative title stuff's been around for more than just the gurus who are talking about it today.
And didn't have to go and get a bank loan.
Nope, you were able to buy it. But you also bought it with equity. Interesting how that happened.
Yeah.
People think that subject to deals can't be done on a you know.
I bought that house 50 cents on the dollar.
You bought it 50 cents on the dollar back in the 70s. I can't tell you.
In a hot market.
I can't, you know what? I bought a deal in 2022, 50 cents on the dollar subject to.
Yeah. In good times.
And I'm still in touch with that person today.
Yeah.
And they called me to buy their parents' house just this year, the first few months of this, the first month of this year.
Creating an ally, you know.
Exactly. And so a lot of times people think you can't buy subject to deals with equity. You know, Leon, you have been, many people look up to you for creative financing. You've been doing creative financing for decades. So obviously we're talking about the 70s and the 80s. You know, not only as a broker are you helping structure these deals, but you got into your deals creatively. Tell me about your thoughts on just subject to in general. You've done a lot of them in your day. Would you do them today? How do you feel about them today?
There's one way I would do some today, but as maybe a lot of people don't know, I think the banks lobbied in the 80s to get even FHA and VA loans to put that due on sale clause in there.
They did.
They were always in the conventional loans.
Well, and a lot of people don't know that you guys were operating subject to when the due on sale was not an issue.
That's right.
And the banks caused a whole fuss. I studied this whole period, and then obviously with a lot of my mentors having done deals, you know, Pete did his first subject to deal in 1967.
Yeah.
And so having studied this, I mean, there was that period where you guys went through a major regulation.
Oh man, it was unbelievable. And then, and when it changed, you know, everybody was, you know, wondering how it was going to affect them and stuff like that. And it kind of slowed things down for a while. But then,
when you mean say you slow it down, a lot of people weren't doing subject to?
Little nervous about doing them with a due on sale clause in there.
Like, what is this new thing going to mean for us?
Exactly. And, you know, if probably a lot of people who are doing subject twos have never read that clause in a deed of trust or a mortgage that
Right.
about
Acceleration clause,
that deal. And you know, and then after a while we get to looking at it and it says may and not shall. That word may, not shall.
Yeah.
And so, and it's even changed up a little bit since then, you know, adding on the 3-year lease with an option and that sort of thing. But, you know, the problem is people don't read.
No.
They just don't read.
Well, it takes me back to remembering how when you had the two secretaries doing the settlement statements and the deeds, how many brokers could effectively do that today? They're less practitioners and more sales and marketers, right?
Yeah. And what a lot of people don't realize about subject to, that language that goes in that deed of trust, in the deed,
To reference the deed of trust.
Yeah, it's just a notice to the buyer. That's all it is.
It's a notice of a title flaw.
Yeah, it's a notice of a title flaw, just like an easement or a tax issue or whatever
Anything
the
like
case.
that.
People don't realize that's all it is, you know. Right. and so consequently, people don't realize that, and I don't think they. But we would start buying, and for a long, long time, there was almost none ever called due, you know. And then there was a few starting to get called due and whatnot, and I did a whole bunch that could have gotten called, and we just kept them and rented them and paid a lot of them off. And my very last one that I did, I know you know about this, but it was in Hattiesburg, Mississippi. I did a 1031 on some property in Blue Springs, Missouri for some houses in Hattiesburg, and that was one of the ones that I was going for, and I bought it with the 1031 deal, and bought it subject to, and the broker salesperson at the time says, "Oh, they won't do that. There's no way they'll do that." And I said, "Look, I'm putting $40,000 into this." I said, I'll go with you and we'll make the offer. And we went and made the offer to this guy. And long story short, he became a great friend later on through the years. And
you did the subject to deal with him. He said yes.
Yeah, we went to see him, made the offer, and he looked at me and sized me up. And he was a pretty sharp guy. And he said, he turned to the salesperson and said, "Hey, the guy's putting $40,000 down.
Yeah.
I'll take a chance with him."
Yeah.
And I think he verified. I think he watched it online and kept up to make sure I was making payments. And I went and paid him off. I paid it off early. I called him up and I said, "Look, you know, I'm going to pay this thing off." And something I didn't do back in those days was get an escrow assignment. I did not have an escrow assignment with him. And there was like $3,000 or more built up in escrow.
Right.
And I said, and I told him that, and I said, "You're going to have to come sign a release so that I can get that, because I paid it in, you know, with the payments through the years." He said, "I'll be glad to. What day you want meet me down there?"
So you didn't have it in writing. He could have screwed you over because you didn't get it, but because of the good relationship you had.
Exactly. You know, I used to go through the drive-through every month and make the payment on that thing because it was at a local. It was a regional bank, pretty large bank that it was Trustmark Bank is who it was. And I'd go through the drive-through and make that payment. And every time I'd go through there, every month, they'd say, "Thank you very much, Mr. Parker." And
his last name's not Parker.
I paid it off early, and with all the subject to stuff starting to come down and the way it was getting done, I got nervous a little early, and I also just did not want to write a check if I had one call due. So, you know, I paid that one off, and I might have done one or two, but the only way I would do one now personally, because I just don't want to go write a check, is if it was a short term and I had a good way out and I was going to flip it and that loan was going to be paid off.
Yeah.
I would not sell it and they expect somebody else to make that payment and be sandwiched in the middle,
Yeah.
where the seller's going to come back and sue me, or if they call the loan and it doesn't get paid, the buyer's going to come back and sue me, and you get trapped, you know.
Yeah,
and
that's something that you've emphasized is you're at a point in your career where you just don't want the risks associated with subject to. Whether you can work around that risk or not, out of all the financing I have, it is the most tasking administratively.
Yeah.
And it's like it has an unknown ticking time bomb that, you might be able to overcome that due on sale call and reverse it, but do you know the stress and headache you're going to be going through while you work through that?
The key is work around and work through. Right. I don't want to work around and I don't want to work through.
And that's
one of those things. I just don't put myself in that position. And there's enough other deals to do that I don't need it. I don't need that. Why do it if I don't need it, you know?
And I think a lot of people don't understand the level of risk management that's in our job as investors, right?
Yeah.
Like managing that risk, why take on that extra risk if you don't have to?
Yeah.
And so now I know one of the ways you have impacted me has been with seller financing. Mm-hmm. And so obviously in the 70s and 80s, a lot of it, but I know you've been I think the only person I know, and I haven't asked Pete this, but like you've been one of the only people I know who's ever gotten long-term seller financing. And then the seller also funded the repairs on the property for you.
Oh yeah, well
that's happened more than once, right?
Oh, we've done that. We've just recently had one where
the one that you called me and we were talking and you were heading into the closing. You called me later and said, "Sorry, I told you the wrong number. I got paid this much at closing to buy."
Yeah.
You want to talk through that deal?
I had looked at the closing statement that the attorney had sent, and it said $500 something, and I just glanced at it and wrote a check for that $500 something. And when I got to the closing, he said, "What's this check for?" And I said, "Well, I thought I had." He said, "No, we owe you $500 something." And the seller wrote a check at that closing to us for $3,700 or something to pay the taxes, the prorated taxes, because he wanted the note to stay that full equal amount. Yeah. And he wrote a check for all the deposits on those properties.
Yeah.
And
so you walked away with a handful of.
Yeah, we had to turn around and pay that $5,000 in taxes on the place at the end of the year, but there was 3 tenants in there, and they had some pretty high. I couldn't believe they'd gotten that much deposit from these folks, but they did, and so they wrote us a check. But the point with that is I've known this guy for a long time. I have total credibility with him, and he with me, and.
Did he call you up out of the blue one day, say, "I got this property, I want"?
Well, we'd talked about it for a long time, and
like someday he'd want to sell you the stuff, like when he's ready.
Yeah. And he'd sold stuff before. He had been a hard money lender for us on some deals, and a long-term lender on some deals.
Okay.
So
long-term private money.
And so analyzing these properties, the payment would only handle like $1,600 a month. So when we figured up at like 5 or 6%, it wouldn't amortize over 30 years.
Yeah.
So we kicked the interest rate down to 3%, and it was 300 and I think 67 payments maybe.
So that's a little bit over
30 years.
30 years. Yeah.
No, it was like 378, I think, 378 payments. But the interesting thing about it is the guy's 85 years old, and he's no dummy. He's a very smart guy. He is sharp. You could sit right down with him right now, and you would have a hard time out debating the guy.
So 370 something payments. So when's your balloon?
No balloon.
How do you feel about balloons?
For clowns, you know.
You said balloons are for clowns, and then someone said also for the circus.
Yeah, the problem with balloons, and I say this jokingly, the shortest time period in the world is in New Jersey. When you're the first one at a red light, and when it turns, between the time the light turns green and the guy behind you blows the horn, that's the shortest time period in the world. The second shortest time period in the world is when you sign a balloon note and when it comes due.
Yes. No.
There's just something about that. You know, about 4 or 5 years ago, I paid off a balloon, and it was a 5-year balloon. And when I did that, I thought, man, this is not a big deal. I'm getting a good deal on this thing. Got seller finance, sold it on a contract for deed wrap, and it's clicking along. And before I blinked my eyes, and 5 years had gone by.
Right.
So I had to send them a check, you know, and it's unbelievable. You don't want to make your life go by so fast, so don't do balloons, because if you do, your life will go by real fast.
People have no idea you can do a deal with an 85-year-old man for 376 or whatever payments, so 30 plus years with no balloon. People think that is never possible.
And they think how did you screw them over, or what did you do? But this guy got freedom and peace out of that.
How did you give him that with your offer?
Well, management. This is the last of his properties.
So he'd been talking to you like, hey, at some point I want to get out of the business and I want to sell you my rentals. And that's, I call that ethical estate planning interference, right?
Yeah. And what kind of capital gains did he have to pay right off on that? Because he financed it 100%. There was no down payment.
So then and you said 2 to 3%? It's as
3% loan.
Yeah, it's as he gets the principal back.
As he gets the principal back.
Yeah.
And he had built these. These were the oldest house was like 7 years old. And, but anyway, has 4 kids, and 2 of the kids get along, a couple of them don't with the other 2. And
so he didn't want them owning them together?
Well, I think he felt like they might fight over them, or they might get the money. A couple of them might get the money and it'd be gone in a couple months.
And that goes back to that ethical estate planning interference, where some people, they don't want to just leave stuff to their kids, but they want to still set them up.
Yeah, and I always would tell all these older people, look, every month when they get the check, they're going to think about you.
Right.
I got that from Clyde Wilson.
Good old Clyde.
You know, and so I got to the point where I'm saying my kids might be paying your kids. Right. But every month when they get that check, they're going to think about you. And he jokingly said, a couple of them probably won't.
Look, and that's right there a selling point. So one of the times you taught me one of the most important questions to ask when you're talking with the seller is what?
Oh, you mean in the beginning?
When you're talking with the seller.
Where are you from originally?
Where are you from originally?
And do you have kids?
Do you have kids?
But you don't just come right out and, you just plug that in somewhere.
Eventually, as you're building, where are you from originally? And then, where, do you have kids? And then also, do you like them?
Yeah. Yeah.
Do they like you?
Find out if they're on drugs, or, if they...
or they're highly successful kids that want nothing to do with dad's houses.
You could ask them, if your kids, if you sold this for cash now, something happens to you and the kids get all the money, what are they going to do with it? Oh, they'll have a new Corvette next week, Or
they're going to go pump their body full of drugs.
Go pump their body full of drugs, and it'll be gone in 2 or 3 weeks. So
that's such an important question, because people don't do deals because they like your offer. They do because of the outcome. And so many times with seller financing, you really shifted my mindset around seller financing is not me begging. It's me realizing who's a good fit.
You're solving a problem.
I am solving a problem.
The relief of distress carries rewards greater than price or terms.
Let's break that down.
And I figured out something last night. I had a little interview with Jim Ingersoll yesterday. And sometimes that prompts me to get to thinking about something. And I said something yesterday on that little podcast about, how easy it is for most people to offer low cash offers. And why are they so scared to make a terms offer? To me, it would be more insulting to somebody to make a real low cash offer, but it's real easy. And I think I figured out last night why that is.
Why?
and you're the first to hear this. It's because I think people don't understand the numbers. They don't understand how to run a financial calculator. They don't understand all of that part of the terms part.
They don't understand the benefits. Yeah.
They don't understand how to even figure it out or present it. So that's why they don't do it.
Yeah.
So that's why I'm big on learning that financial calculator and learning, to run the numbers and
I never knew of the financial calculator before I met you.
Really?
So no one talks about it.
And you've done some pretty fantastic deals.
I'd done probably a few hundred deals by the time I had met you, like at that point. And so no one talked about it because everyone was in the business world. What did they teach me? They taught me the Mayo, 70 cents of the dollar.
Price.
They focused on price, not, the time value of money or anything like that. And so you pointed me to Invest in Debt with Gary Johnston.
Yeah.
Gary Johnston's class, but with Clyde Wilson, who taught the calculator, and then Invest in Debt with Jimmy Napier, that taught me the calculator. Those two resources taught me the calculator. I had that calculator for 6 months on my phone before I knew how to use it. But the book, Invest in Debt by Jimmy Napier, helped me. But then also Gary's class, the Financial Freedom Principles class, helped me really teach me how to use it more.
I gave one of those books away to one of my neighbors, a young guy that's really a sharp guy, but, I gave him a Jimmy Napier book the other day and told him, go home and your wife will show you how to download, or your kids, that app on the phone. Now, I don't know if he's done it or not. I gave it to him about a month ago. We're going to see if he's reading it or not.
Check in on them. But that financial, I think that's a really powerful statement. Not understanding, really that boils down to they don't understand the benefits of a terms offer and why someone would accept that versus a low cash offer.
But I think what keeps them from making that offer is not fear that the seller won't accept it. It's the fear of not knowing how to
structure it.
Yeah. I think that's why people aren't doing it. That's what I came up with just last night.
Yeah.
And
I think that's true.
You see what I'm saying?
Yeah.
I mean, if you don't understand it yourself, you're not going to offer it to a seller.
Yeah.
And I've just wondered through the years why, and it just hit me last night. Why don't people, gosh, you can walk in and offer $50,000 on a $100,000 property and not phase them, but they can't. They're scared to offer $75,000 with terms.
Right.
And people will, if you are truly giving people relief from distress by giving them freedom and peace
from whatever problem they have
with terms, they'll take it.
Truly, and I can't tell you how many times. So I think around 2018 or 2019, when I started meeting you and Adam, it was I started making two offers, one cash offer, one creative. And the very first time I made a creative offer, it was seller financing, along with my cash offer. The guy said, well, I might be open to that, because I said, in the event I could do something like this. He said, well, I might. And I said, really?
Yeah.
I had prepared so much. I was so nervous. And we ended up not inking up a deal we did the cash deal, not the creative deal. And but I just remember the first time I offered it, he was open to it. And I thought I was going to have to go through 100 offers to get someone interested.
You made me think about a religious joke, and I probably shouldn't tell it, but there's one religious group that has the adult folks, couples and stuff going around. It's not the LDS people, but another group. And Johnny Carson made a joke about it years ago. Something you'll probably never hear is, hey, honey, put another cup of coffee on. I see this particular religious couple coming down the street. So the joke is, they knock on doors and say, we'd like to talk about something with you. And so
the door knocking religion.
Well, the guy let them in, and he said, well, what do y'all want to talk about? And they said, we don't know. We never got this far yet.
Exactly. They door knocked forever, and no one ever said.
We never got this far along
exactly.
before. But
we forgot our training.
That's kind of like, people just don't know how to present or even discuss or structure a terms offer.
And I think that's really powerful. And so many times what I pick up from you is how you talk to people about it. One of the things you taught me was that, some of the words you say and some of the words you don't say when talking to sellers. Tell people about that.
You don't say seller finance, you don't say owner finance, you don't say creative finance. Those are all
dirty words.
Dirty words that trigger no's.
Yeah. And, what do you say instead?
Well, installment sale or look, I'll tell you what, I'll buy this, I'll give you your price, or I'll pay you this amount, but here's the way I want to pay you. I'm going to give you $10,000 down, and I'll make you payments of $500 a month till it's paid off.
Mm-hmm. What do you think about the people who say...
Don't say years, don't say months, I'll give you X of dollars a month payment. But
until it's paid off.
But what you just said is the most important thing, is that you're not begging them to do that. Mm-hmm. You're solving a problem for them. You're coming up, your offer is going to relieve them of a bunch of distress. Mm-hmm. Okay? And by doing that, you're giving them some freedom and peace, and whenever you solve that problem for them, it's like a burden is lifted off of them. Right here in this house, I had a guy and his wife came, and I had made this offer to them. Adam had taken me to their house, made this offer, and the guy, had no credibility with him. I think he liked me. Great guy, and I offered him nothing down, but I didn't say those words. He wanted $140,000 for his house. So sitting at his house, this guy was an engineer, by the way, retired engineer, mm-hmm. and he had bought this house to try to make his money work better for him, because he had a bunch of money in a checking account, getting nothing, several $100,000. And anyway, I just figured up on my calculator, and I texted to him sitting in his living room at his house, not this rental house. And he looked at it, and it was $140,000, 3%, no interest. 3%, no balloon, 360 payments. This guy was 72 at the time.
Yeah.
Okay. So he decided he was going to rent it again. It was vacant. He did two professional tenants, and these tenants just took him to the cleaners. He was not a property manager. He was an engineer. He was good at what he did. Yeah. Had been successful, but he was not a property manager, and they just took him to the cleaners, and he finally got him out. And somehow or another, we ended up sitting back in his living room again. Yeah. And I really didn't remember what I had offered him before, but man, I sat there and I figured it up and texted it to him with the calculator with my phone, and he looked at it. He said, "That's the same offer you made the last time you was here," which was like 6 or 8 months before. I said, "Oh, is it? Yeah, okay." I said, "Well, that'll work." And he asked a million questions, as engineers will do sometimes.
Right.
And finally, a couple of days later, he calls me, and he said, "My wife and I would like to come down to your house and talk to you." So I gave him the address. I said, "Come on." So they come, and they sit in our living room in there, and he asked a whole bunch more questions. And I think I was gaining credibility. He saw where I lived, and he was feeling better about me. He was still a little nervous. And so we wrote up a contract.
Here at your house?
Here at my house, sitting in the living room. And we said, "Wouldn't you guys like something to drink?" And they said, "Sure, we'll do whatever." And my wife and his wife come into the kitchen, and they're getting something to drink, and she whispered to my wife, "You guys are a godsend to us. You don't know how much you're helping us out."
Yeah.
And there was the down payment was never mentioned ever in that. And so I got it nothing down.
Yeah.
$140,000. Now the house is worth, that was 6, 7, 8 years ago. House is worth like $200,000. His wife has since passed away.
Okay.
And
you're still making payments every month.
Still making payments.
And when you make payments every month, what do you do?
Oh, I go through the drive-through and I text him and say, "Hey Jim, just made your Merry Christmas. The other day I said Happy Groundhog Day. I just made your payment."
So, and this is something I learned from Leon. So you don't put most of the stuff in the mail. You go and bring it and you deposit it at their bank.
Exactly.
And
I have their account number.
And you have their account number, you deposit at their bank. So on the first of the month, you're making payments.
Or usually a week or two early.
Right. And then so you're doing that, and you are making all these seller finance payments, and then you're texting them to stay in that relationship.
Well, about 4 months into this deal, this guy called me one day and he said, "Look, Leon," and Adam was involved with this deal. He said, "Leon, I don't know if it'll help you and Adam or not, but I got extra $400,000 sitting in my checking account if you guys need it to make some investments in real estate." He said, "I'm not getting any interest on it." And it was probably a year before we used any of that.
Right.
And I gave him, actually, after that, I dropped Bob Zachmeyer's Be the Bank or whatever it is. I forget the name of the book. I'd bought like 20 of Bob's.
Who Needs the Bank or something
and
like that.
And I gave him one of those books and he read it.
Yeah.
And since then, I had never used any of his money. But Adam, I can't tell you how many times he's loaned Adam money on some short-term deals. And Adam would offer so much. And I know one time Adam said, I just gave him $1,500 extra. You know, over and above what the
just to sweeten the pie
interest was on that deal, you know.
Yeah.
And I think he just borrowed some more from him the other day on a deal.
And that's a seller you guys turned into, you know, a private money lender.
Exactly.
And so many times you've gotten long-term seller financing from folks who
This guy had 2 kids. Yeah. I've never met either one of them, but that's one of the first questions I asked. Do you have children? And you know, he said, well, I'm not going to live that long. And I said, well, Adam will probably be making payments to your kids. And because we intend to keep this long term. And so, you know, that's how that's worked out. That's why he was willing to do it. And you know, his wife has since passed away. He's like, I don't know, hitting close to 80, I think.
And there's so many. Why do you think when you do seller finance, did you immediately start off with them being more long-term, like 30-year seller finance?
Oh, yeah, I try to get as long as I can.
But when you first started, did you do them, or did you do balloons with them?
Yeah. I'm trying to remember. I did a balloon with this one guy, that one I was telling you about.
But most of your stuff has just been.
I remember was that one.
But most of your stuff's been longer term. What's the longest you've ever done a seller finance?
That might have been this one here recently, 370 something payments, I think.
Mm-hmm.
And I'm not going to live that long. He's not going to live that long. He knows that, right. And I know that.
But you see, people think that they think for the seller that there has to be a balloon.
Yeah.
And especially getting, you know, I think the oldest I've ever had someone was in their 60s do a 30-year no balloon seller finance.
Yeah.
And it was not an issue. That was something we were able to structure into the deal because of the problem we solved.
Yeah. But see, that was a side issue. That was the key, though. The stress on he and his wife because of those renters and having to deal with that and him having to go over there all the time and that sort of thing.
He wanted relief from that. And you said the way I'll do it is if you do this long-term owner finance for me. Yeah. And I think that's powerful. A lot of times, you know, a lot of people say, you know.
And he didn't come out and tell me, this is bothering me. It's just little things he said. Well, I'm having to go over there and I'm having to do this. He didn't come right out and say, I'm selling because of this, but because of the questions you ask, that's what you find out.
And getting better at those questions help you discover, why would someone sell a nice house like this?
Exactly.
And so, you know, when people want to learn about creative finance, so many times they ask that question, how can I learn about creative finance? How do you answer that?
Don't make it complicated, first of all, but like I said, you need to read the dadgum Jimmy Napier book, Invest in Debt, and get that calculator, or go to, you might not have a chance anymore, Gary Johnson's class, but you better learn how to run that calculator and
Most guys who teach creative finance today never know what that calculator is.
Don't have a clue.
Yeah.
There's one of the most famous, supposedly creative finance guys out there right now, guru guy. I won't mention who, but I personally asked him at dinner one night. We were in Phoenix years ago. What kind of financial calculator they have? Didn't have a clue. Mm-hmm. Yeah. Did not have a clue.
Because it's not taught as important, and you don't consider doing a deal without it.
And they think he's a creative financial guru, and I guarantee you don't know how to run a financial calculator.
Mm-hmm. And so that is something that's been very powerful for me, is being mindful of who you learn creative finance from, because someone who's only done creative finance in the last 10 to 15 years, most of them are not going to be using a financial calculator. They're not going to be thinking about it. But then you guys, and a lot of these guys, they also teach things like have balloons and stuff. Well, guess who's getting hurt today?
Yeah.
People who are doing deals that have balloons, and now it's a difficult market and stuff like that. So, yeah. Okay, so someone who wants to learn about it, talking about learning, reading the book, Jimmy Napier. Jimmy's one of the guys who was a creative finance guy. He wrote the book Invest in Debt. That's about paper, so mortgages, but
to answer your question, if they want to learn it today, take every one of Courtney's classes.
I didn't pay him to say that.
No, she did not pay me, and I'm going fishing. Because the day you want help is the day that the good fishing lines up.
Exactly.
The stars line up. It's the best day, and I'm committed to teach you something about financing.
Exactly. You were talking about that. Yeah, the day that you commit to do a class or something is going to be the best day to go fishing or hunting. Yeah. So let's bring that to the final thought. You've said these words, these two words a lot, but what does freedom and peace mean to you?
Oh, man. Freedom of time, freedom to go and do a lot of things, freedom from stress. Mm-hmm. Freedom from stress. And not doing things that's going to get you in the quicksand that you're trying to struggle to get out of. Learning to say no. But yeah, freedom to go do what you want. I'll just tell you, years ago when I was probably 30, I had a goal, and it's real general. I've never been one to say I'm going to do so many deals and that's not been me. And one of the richest guys I know that's been the most successful in real estate, he's in his 80s now. He's probably worth 50 plus million. I'm not going to say his name. If he's listening, he'll know I'm talking about him. You know him.
I
do. He never had any goals like that.
Yeah. He
said, I've never had any goals. I just go do deals. And with me, I had a goal of being able to get up in the morning and go do anything I wanted to do physically or mentally that day, and my income not be dependent upon anything I had to go do that day.
Right.
So I started working, trying to come up with things that worked when I wasn't working, businesses and real estate. So you want to move towards getting as much income, getting all your income from rents and interest.
Right. Because so you talked about your brokerage, you've owned businesses. We didn't even talk about a lot of your history. You've been in this business for 50 plus years, and there's a level there that you've been a businessman. Mm-hmm. But talking about getting away from that labor-based income, that's so hard to do.
It is.
We were talking about that earlier. Not many rooms in the real estate world does this message really resonate, or is it well received? Yeah. Because what you have is many of the real estate rooms are full of business people.
Yeah, business people or people with jobs.
Right.
And schools today, that's all they teach is how to go, this is what it was for years, how to get a good job. Yeah. Now they teach crap you can't even get a job with.
Yeah, sure. That too. So, that freedom and peace part, I think that's super powerful, because not only is it powerful for us as investors, it's, what do we say yes to? It's the deals we do where they bring in us freedom and peace. Mm-hmm. I remember the largest deal of my career, we almost closed at 3 separate times. It was a large commercial deal, that 500 and something units. And I remember I had a panic attack one time, and I thought, am I getting into this deal? Am I going to bankrupt my family doing this deal? Mm-hmm. And I'm so thankful. You know, it was really Providence it didn't close in hindsight, but you know, that deal did not bring me freedom and peace. And
Exactly.
If I knew that now, I would have cut that deal off way longer, you know, way earlier.
Yeah.
And so that freedom and peace, how did that come to you?
I don't know.
Were you fishing and you're all of a sudden thinking about
providential?
Yeah.
God sent it, I guess, is the only thing I could say, you know.
But
because
I know the last few years it's been pretty big language for you.
Yeah. It's you know, and I've had 2 or 3 times through the years that I didn't have freedom and peace because of either people I was doing joint ventures with, or people that you know, just deals that maybe I was stupid for getting involved and I shouldn't have.
Well, and I know when we wrapped up we had our group coaching and we were making the decision to stop it. One of the reasons we made it was freedom and peace.
That's it.
Right?
That's it.
That making that commitment to do the business of education does. And that's honestly been one of my biggest, you know, wrestling with the business of education is it takes away from the freedom and peace part. But
yeah, you're still trading hours for dollars.
You are. And so it's really hard because this freedom and peace thing, it's freedom to, so that like the fishing, the things you can do, but also the freedom from. And those are those time commitments.
Exactly.
You know, you're talking about, you know, not wanting to schedule something because every time you do, it's the perfect time to go fish. Yeah. And it's almost like that lines up. But it's also these offers we make to sellers. It's what are we giving them freedom to or freedom from, and knowing that that's the key. That's the
biggie. When you think about it in terms, you know, Zig Ziglar says, if you help enough other people get what they want, you can have anything you want.
Right.
And so what people really, really want, and they don't know it, they've never defined it as such, they don't think about it in those terms, is they really want freedom and peace. Mm-hmm. Freedom from stress, the relief of distress. And the other thing, let me just say this, I know you're about ready to close, but freedom and peace is subjective to everybody.
Exactly.
And it's different for everybody.
Right.
They have different levels of, I don't know, not hierarchy, but...
The hierarchy needs of people, what people
they're
have.
in different places in their life,
you
know. Somebody that maybe inherits, like you said, a hoarder house out of state. They've got taxes in, they got to worry about that, and that can become one of the biggest burdens on them that there is, and you figure out how to bring them freedom and peace in that in that realm. And you know, why do people walk away from free and clear property because they didn't pay taxes on it for 2 or 3 years? Why do they do that? What is their mental state? And their level of
what's going on in their life?
What's going on in their life as far as, you know, what will bring them freedom and peace is way different than ours. And we're willing to step in some of those shoes to bring them that and solve those problems. And in doing that, we get what we want. And there's some cases you better not step in those shoes because it'll take away your freedom and peace.
And I think that's a really important part, knowing when to say no.
Exactly.
Because sometimes, and Adam taught me this, is sometimes the best you'll ever do is the one you didn't do.
Yes, exactly.
And so as we start to wrap up here, you have this story where you talk about the paper bag.
Oh, yeah.
And this is a really powerful one. Do you mind sharing that?
Well, that's just when you're making an offer. It's just a little way to find out 2 things. Instead of just being blunt, when you're making somebody an offer and they tell you how much cash they want.
Make it all about them. It's not making it all about the money.
Yeah, say, well, instead of just saying, well, what are you going to do with the money? You create a story. And the story is, well, let me ask you something. You want $100,000. If tomorrow I showed up here with $100,000 in a brown paper bag and we lay it out on your kitchen table and you count it all out and lay it all out, what are you going to do with it? So you create a story instead of just being blunt. And you can tell two things, how motivated they are, and if they tell you it's none of their business, none of your business, you're probably going to have a hard time solving their problem.
Yeah.
Creatively.
And a lot of times, usually when they say that, I realize I failed in the living room. I didn't build enough rapport.
Yeah.
If someone tells me, it's none of your business or
and
something.
And if I see them hesitate and they may be thinking about telling me to go to heck,
yeah,
I'll say, there's a reason I'm asking you that. If you've got some silver bullet place you want to invest this money, I might want to invest some in the same place.
Right.
So that kind of lets them off the hook.
Yeah.
Lets the air out of the blowed up balloon, and but a lot of times they'll just tell you what they're going to do.
Yeah.
And if you can solve those problems for them, if you can do better with their money than they're planning on doing with it, then they'll. And they got kids. Mm-hmm. Older people, you want to know, hey, about the kids, because the objection you're going to get is, I'm not going to live that long. And well, what's going to happen to the rest of your property if something happens to you? Well, these payments will just keep on going to your kids. And every month they're going to think about you when they get that check.
Yeah.
I say that all the time. It's the same thing over and over and over again.
Exactly. Well, and going back to the brown paper bag, it's, the very first day I met you, I came here for the crawfish boil, and I stayed all day. I was so enthralled. And then we went through the crawfish heads in the pond, but you drove me around on your John Deere Gator. And we're going around, and you pointed out to this pull behind RV camper, and you said, someday I'm going to trade that as a down payment. And I had never heard language like that, right?
Oh, really? Yeah.
No, because everyone dealt in dollars, right? Mm-hmm. And from you, I learned that there can be a currency of stuff. And it's really, when you're talking to someone, is finding what they want, because, well, maybe they want a retail down payment, mm-hmm. Let's just say, 10+% down. Well, but maybe they really want that to go buy an RV, but maybe you can go get the discount on the RV and then bring that as a down payment that then gets them what they want.
Oh, gosh, yeah. My friend, and I'm not going to say his name, cut his finger real bad one time. I was taking him to the hospital.
Yeah, I remember this.
And on the way home, I told him that he needed to give up power tools, because he cut himself with a chainsaw too, mm-hmm. not long before that. And so I started telling him the way to find opportunities, and his wife was in the back seat of my truck, and she said, well, I know somebody wants to sell their house. Long story short, that next afternoon we were at that house, and it was one of the worst I've ever seen. The person was still living there. It was not a hoarder house. It was just nasty bad.
Yeah.
And so anyway, we walked through, and I did the brown paper bag on the master bedroom master patio. It had a 4-bedroom, 2-bath house, great neighborhood. We still have that house. I don't know, it's been 10 or 12 years. And I asked her what she wanted, and she told me $60,000. And I said, the brown paper bag. Well, if we brought it and put it on that table, she immediately told me I'd get me a mobile home out in the country. Mm-hmm. So I said, don't do anything. Let us see what we can do. I'll make this real short, Reader's Digest. I'm leaving a lot out. But long story short, she had found a mobile home spot she could rent out in the country for $75 a month. Already was set up, septic, all that stuff. And my friend and I went and found a really nice mobile home for $20,000. And I told the guy, I tried to negotiate with him. He wasn't coming off a penny. And he'd even paid taxes in advance, as you do on mobile homes. And we had to end up paying him that too, plus the $20,000. But anyway, I said, I've got a lady I want to come look at it. And if you mention price, the deal's off. Mm-hmm. So I got her to come look at it. She loved it. I said, what if, and she wanted some new furniture. And I had bought another place and had stacked in my guest house a bunch of really nice furniture. So I brought her to look at it. She didn't really like it. So I said, well, look, what if we did this? What if we buy that mobile home for you, move it up on that lot that you have, we'll skirt it, we'll build you a deck, we'll have cold air, because she was standing in that guest house. I didn't have the air on, sweating. I said, we'll bring you cold air, we'll have the water, sewer, everything hooked up where you can just move in, and we'll give you $5,000 for some new furniture. She said, I'll do it. And when the smoke cleared, we had $32,000 in that deal, and we traded it for that house. And I had the title done on it, met her at a hospital parking lot on the hood of the truck, had a notary out there, and she signed the deed and gave it to us. I gave the guy with the mobile home a $20,200 and something check, and he gave her the title of the mobile home right on the hood of a truck. We did
all
a three-way deal.
All three parties.
Yeah. So we ended up with that because I asked,
what are you going to do with it?
Yeah, what are you going to do with the money? And so we ended up with $32,000 in it.
Yeah.
Instead of $60,000. Of course, we put another $50,000 in remodeling the house and whatnot.
And it's today worth
probably $200,000.
Yeah.
And we rented it out, and the same folks are still living there. I don't know, 10 or 12 years later.
And there's so many things you and I could talk about, and you and I, we could talk for hours as we have over the years. I always enjoy when we have the time to chat. I've been so excited to get you on for an episode because I know I've had the pleasure of learning from you, and a lot of people, as you said, you're not in the business of education. So whenever anyone has a chance to learn from you, I know it's always a pleasure. So thank you for letting me share you with others.
You bet.
And I know better than ask, how can people get in touch with you? Because that's not really what you want.
Yeah.
And I think so many people don't realize that you can learn from something without taking from it.
Yeah.
You know, I want to come pick your brain. When people ask to pick your brain, you tell them no all the time. I know because they messaged me because they said, Leon said to go talk to you and watch some of your videos. But nonetheless, Leon, I'm so thankful for your impact. You introduced me. I remember the first day I met you. Again, it was here for Crawfish Bowl. You told me at the end of that day that, well, you know what? I'm going to a conference in 2 weeks in Atlanta. You should go. And I'm thinking, this guy is phenomenal, does deals so different than I've ever been taught, you know. And so I went, and that was the conference I met Pete Fortunato and Bill Cook. So thank you for all the impact you've had on me, and I appreciate you sharing.
Well, you know, it's exciting to visit with you because you're, first of all, so smart, so energetic, so enthusiastic, very competent, and you know, I watched you work through one of the most complicated deals that anybody's ever worked through and made $100,000 plus off of that thing. Most people wouldn't even have started on it. It had so many layers and different things. I said, if she works through that, this girl, she's going to be tough, something else. And sure enough, look, she's not paying me to do this, but I'm telling you, if you want to learn stuff and do it right, come see Courtney.
Thank you, Leon. Look, I appreciate you. And every single time I can get to this house, it's always a good time. So thank you, Leon.
You bet. Thank you.